Hello and welcome to Money Markets and More with me, Dominic Frisby, coming to you today from the land of lakes and swamps, otherwise known as Finland. I'm actually in Lapland. How about that? And today we are talking platinum, and there is platinum that occurs in these parts of the world, although I'm not here visiting a platinum mine, unfortunately. I'm here on a little holiday to see the Northern Lights. Now, these past 5 years have seen most metals have a brief moment in the sun, but not so much platinum, which has been wretched. Platinum is up there close to silver for its propensity to disappoint, and its day will come. The question is, when? But I do note with some optimism the relative strength it's displayed in the volatility of the last couple of months. And moreover, last month the World Platinum Investment Council published its Platinum Quarterly, which would be for the last quarter of 2022, because they're always a quarter behind. And it's quite promising. After 2 years of surpluses, the platinum market is forecast to move into a material deficit in 2023, and the swing is quite considerable. And I'm going to have to quote some numbers at you, if you don't mind. There was almost a 1 million, it was a 775,000 ounce surplus in 2022, and that will become just over about a 500,000 deficit in 2023. So that's 750 surplus to 500,000 deficit. That's quite a big swing, and it translates to a 24% increase in demand, but at the same time there's just a 3% increase in supply, and supply was down in 2022. So where's the demand going to come from? So there are three main sources of platinum demand around the world: industrial, especially cars, investment and jewellery. Now, the auto market's set to see a 10% increase in demand, says the WPIC, and the rest of industrials are going to see roughly a 12% increase in demand. And both jewellery and investment demand are also forecast to rise. So, platinum is used in the automobile industry, in catalytic converters it oxidises the carbon monoxide in diesel engines, and that's why catalytic converters keep getting nicked for the platinum. Palladium is used in petrol engines, and the thieves want that too. And global automotive demand is on the increase. We're not yet at pre-pandemic levels, but demand seems to have shrugged off the issues from lockdowns in China, the war in Ukraine, chip shortages, cost of living concerns, all those kind of things. And for platinum specifically, there was a 28% increase in demand from hybrid vehicle manufacture. And tighter emissions legislation in China, which also means more platinum for heavy-duty diesel vehicles. And there was greater substitution of platinum for more expensive palladium. Now, that's not going to last, because the palladium price has come down 50% from its highs. Ouch. But industrial demand is largely coming from China and also from Japan, from the glass industry. Jewellery demand from China is also forecast to increase as lockdowns ease. But the big eventual kahuna for platinum is the so-called hydrogen economy, green hydrogen fuel cell electric vehicles. Platinum is used in the water electrolyzers to produce green hydrogen, and it's also used in hydrogen fuel cells, which can power fuel cell electric vehicles. And so it's key to unlocking the whole hydrogen thing, and thus it'll be key to meeting global net zero targets and all that bollocks. Now, at present, European policymakers have bet the farm on electric cars. Japan, however, has gone down the hydrogen route to decarbonisation, and given that the ultimate source of most electricity is the burning of fossil fuel, it seems to me at least that hydrogen is the better option. But all that, it's all well known, and currently the market doesn't seem to care. So I'm quoting a dude from the WPIC now. while, I won't read out his whole quote, but let's just say that eventually fuel cell vehicle demand will match current automotive demand. And that's from the WPIC Research Director, Edward Stirk. So current automotive demand and fuel cell demand will be the cell, and will be the same. Perhaps as soon as beginning of the next decade, assuming some broad commercial adoption. So that's bullish. It's all pretty bullish on platinum demand side. But on the supply side, the issues are South Africa and Russia. The former has the perennial spectre of operational challenges, power supply risks, strikes, and then the latter's been frozen out of pretty much all the global economy, well, the Western economy. And Russia and China's like 90% of platinum demand, something like that. In fact, the big fish in the platinum pond is one small region in South Africa called the Bushveld, about 3 hours drive northwest of Johannesburg, and 75% of annual global supply comes from there. And talk about a centralised market. With one central point of failure like that, the market's extremely vulnerable. Should something significant go wrong, strikes, political disruption, power supply failures, some kind of natural disaster, the platinum market has big problems, and platinum longs will do very well indeed. All that, strikes, power failures, they were big catalysts in the noughties when platinum went north of $2,200 an ounce. Today, platinum's about $1,000 an ounce, and in these inflationary times, it's hard to find an asset so far off its highs, more than 50% off its highs. But as I say, when it comes to disappointment, platinum, like silver, can be relied on to deliver. Now, in our psyche, platinum's more expensive than gold. That's why platinum credit cards are higher status, why in the world of album certification, platinum, 1 million units sold ranks higher than gold, which is only 500,000 units. And platinum's also rarer than gold, which is why it should be more expensive. And in 2008, it was more than double the gold price. The historical average is 1.25 times. So with gold at $2,000, you'd expect the platinum price to be $2,500, but no such luck. It's half the gold price. Leaves a lot of upside, but the chief villain in all of this is the Volkswagen diesel scandal of 2015, when it emerged that diesel engines weren't quite as clean as they were made out to be. And the platinum price was already falling by then, but when the scandal broke, along with other metals, it was falling along with other metals, but when that scandal broke, demand for diesel vehicles broke, especially in Europe. Unfavourable taxation regulation since, platinum's never really been able to recover. There's also the fact that though precious, platinum isn't really a monetary metal, so the speculative sort of anti-inflation trade that buys gold, silver, crypto doesn't really buy platinum. And then there's also the fact that as far as jewellery is concerned, platinum isn't maybe as fashionable as it was 10 years ago, probably because it's worth less, ironically, and jewellery is a status symbol. But that appears to be changing. Jewellery demand is picking up, and the fall in demand for diesel, that's all levelled off. And those figures from the World Platinum Council suggest that after many years of flatlining, of disappointment, the platinum story may be getting ready to roll again. But the lesson of the last 15 years is to never underestimate platinum's propensity to disappoint. There are three potential stories that could precipitate a dramatic change in platinum's fate. There's a change in attitude towards diesel, there's the hydrogen economy taking off, and there's something going wrong in South Africa. Probably the most likely. And over the past year, platinum has ranged between $800 on the low, $1,200 on the high. At the moment, it's in the middle of that range. But as I say, it's displayed some impressive relative strength in the market volatility of the past couple of months. I can't say volatility. Platinum's doldrums may continue for the time being, but one day it will all look very obvious that everyone should have had some platinum in their portfolio. It's one of those, and if you can pick it up, I don't know, $900, something like that, even below $1,000, I can't see how this goes wrong as a long-term investment. But as I may say, you may have to wait a while for the investment to come good. But a return to normal historical ratios between platinum and other metals could see it easily double. So, how to invest in platinum? As with gold and silver, there are two main ways to play the platinum story. You can either buy the metal itself or a derivative thereof, or you can invest in a company that mines the metal. And if you're interested in learning more, and in particular about what I consider to be the best platinum miner out there, then I've written a special report on platinum on my Substack, and there's a link in the description, and you can find everything you need to know there. Thank you very much for watching. My feet are sinking into the snow. I'll be back with another video very soon, and behind me is a frozen marsh. How about that? Pretty spectacular, sort of barren wilderness. Thanks very much for watching. Anyway, please subscribe to the channel and look out for my West End gig in May. I'll see you soon. Goodbye.